What's up guys, Gital here, and welcome to another educational masterclass of mine. Today's topic is gonna be time frames in trading. I will go over some of the classic questions of should I only use one time frame, should I stick to one, should I use multiple time frames, what is the best time frame to use in trading. Also, we do have the WoodsBot Premium Indicator, which makes use of different time frames as well, so I want to go over that as well. So let's get into it. So first things first, just to cover the basics, what is a time frame, right? So if you go to TradingView, you are on the Bitcoin chart, for example, and you can see right here in the left corner that I have this massive list of different time frames. Now I'm on the monthly time frame. What does this mean? So a monthly time frame means that each candle you see right here on the chart is 1 month worth of price action. And the same thing goes for the weekly. So one candle is 1 weekly worth of price action, and so on and so forth. That basically covers it. Now, what time frames are there to trade? Well, if you go to the settings, you can basically see and add any time frame you want. You can see I've favorited a couple of these time frames, but there's lots of time frames. You can even trade the 1 second time frame, which I do not recommend, but it is possible, you know. So there's lots of different time frames. The question is, which time frame do I use? To answer that question, it is really subjective. It mainly depends on your lifestyle. Do you want to trade on a daily basis, or do you want to swing trade and only trade like once per week, or are you a macro trader who only wants to trade every couple of months? You know, it obviously depends on what kind of person you are, how much time you want to spend in trading, how much attention you can give to the charts, and this kind of determines which time frame you should be using. So if you are working full time, for example, and I don't know, you work 10 hours a day, you have kids, you have a family, and you have only maybe like 1 hour per day or half an hour per day to look at charts, obviously you can't be trading the 5-minute charts, right? It makes no sense because the trend and the bias, it switches up so fast that you can't really, if you don't have the time, you shouldn't be trading lower time frame, right? So if you do not have a lot of time, stick to the higher time frames. Use the daily time frame, use the 12-hour, the 3-day, the 5-day, the weekly, or even the monthly. So if you don't have a lot of time, make sure to stick to the higher time frame. I would consider higher time frame everything above the daily. The daily is also a bit is also higher time frame, at least in crypto it is. In stocks a bit less, because it's already has so much history, but since crypto is newer in trading, I do consider the daily time frame higher time frame. So everything like the 12 hours daily to the monthly is definitely good for you if you don't have a lot of time for trading. If you are looking to be actively trading, consider using the daily chart, the 12-hour, the 4-hour, the 1 hour, the 30-minute, or even the 50-minute, or even the 5-minute. You can get a lot of setups on the lower time frames, and thus more potential trades, and thus more potential gains. Also potential more losses, but obviously if you already have a proper working trading strategy that is profitable, the lower the time frame you go, the more trade opportunities there are, and the more potential profits. However, if the lower time frame you go, the lower the accuracy will be of your trades. It is always recommended to use medium to higher time frame trades in order to plan your trades. Lower time frame trades tends to have a lot of noise. Now the question is, should you only use one time frame for your trading? I think it's a bad idea. I don't think you should only be using one time frame for your trading. The reasoning behind this is, for example, let's go to the monthly time frame, right? And let's do some basic analysis. So when I go to the monthly time frame, I can see that the monthly is in a downtrend, right? It lost its weekly swing low right there. It is making lower highs and lower lows, right? And here it made a lower low. And there is potential for Bitcoin to make a lower high around this area, right? We don't know how high it's going to be, but there's potential for another lower high because of the downtrend, right? It's making this more likely just based on the structure. So on the monthly, Bitcoin is still bearish, right? So there's no real reason for you to long on the monthly time frame. But if you, for example, go on the daily time frame, you can see that we have a nice daily trend structure in place, right? We're making higher highs and higher lows. Higher highs and higher lows. So even though Bitcoin is in a downtrend, on the daily time frame, it is in an uptrend. This means that you have swings inside of swings, right? Price action always moves in swings. You can see this here, right? It swings, it makes swing highs, it makes swing lows. It makes swings highs, it makes swings lows. And obviously, every time price action goes up, it also needs to come back down at some point, and vice versa. Now we are seeing price action went low, it bounced, it made a new low, and it's bouncing as well. On the higher time frame, on the monthly, you don't really have a lot of trade potential, right? But if you go to the quote-unquote lower time frame relative to the monthly time frame, if you go to the daily, there's lots of trade potential. Each time, even if you're not in a position, each time you can potentially bet on price action making higher lows, because on the daily it is in an uptrend. Again, on the monthly time frame it is in a downtrend. To have that information is really important, right? Because even though it is trending up to the downside, we know for a fact that on the monthly time frame it is trending down, right? And then the daily time frame it is trending up. So what this means is that you can basically use that to your advantage. You can plan trades based on different time frames, right? For example, you see, okay, Bitcoin is in a bearish in a bearish downtrend, and for example, you use the WoodsBot indicator levels or the, for example, Fibonacci. So you pull your Fibonacci retracement on the swing high to the swing low, and you see, okay, this WoodsBot level aligns with the Fibonacci levels. This is a potential short scenario. Right, just to give you a basic example where to look for shorts, for example, you see, okay, Bitcoin, this is a potential area where I would like to go short on the monthly time frame. However, price action needs to get there first, right? So you go to the daily time frame, for example, and see, okay, Bitcoin is actually trending up on the daily time frame. It has a bullish market structure on the daily time frame, and you can you can be long on the daily time frame, and then go short, for example, when price action finally gets there. So you're in a long position, price action gets to your short position, a short zone on the monthly time frame, and then you can consider a short, because the overall higher time frame market structure is still bearish, right? So even though it might look like Bitcoin is gonna pump forever, you have to keep in mind the higher time frame market structure. So what this translates to is, in my opinion, it is the best way to do is to plan your trades on the higher time frame, but to execute on the lower time frame. And I'm going to give you guys an example. All right. So, for example, if I'm looking for a long position, right? Let's say this was this is what we saw. I'm in the replay tool now, and I'm going to pull my Fibonacci out, right? Now I'm on the 12-hour time frame. I've identified the market structure. The market structure is bullish. I have identified the swing lows and swing highs. So I pulled my Fibonacci out, and the Fibonacci levels that I'm interested in playing are these levels, right? So, and if you guys know my strategy, in order for me to enter a trade, I need price action to touch a WoodsBot level, I need price action to hit a Fibonacci level, I need price action to have bullish or bearish divergence on the RSI indicator, and I need to have decreasing volatility, right? So, as you guys can see on the 12-hour time frame, there is no WoodsBot levels on the Fibonacci levels, right? But I don't need to have a 12-hour WoodsBot level when I'm planning my trades. I'm planning my trades on the 12-hour time frame based on market structure, but I execute on lower time frame. So even though I plan my trades on the higher time frame, I execute on the lower time frame. And I think this is the best way to do it. So plan your trades on the higher time frame and execute your trades on the lower time frame. So if I let price action play itself, we can see in the next candle Bitcoin hit our Fibonacci levels, right? But there was no WoodsBot levels. There was also no bullish divergence on the 12-hour time frame. So if I were to only use one time frame, I would never be able to take any trades. Never with my strategy. So what I need to do is I planned on the lower time frame. I need to go on the higher time frame. I need to go to the lower time frame. And what I usually use is the 50-minute time frame. So I plan on the higher time frame, but I execute on the lower time frame. And you can see all of a sudden we do have bullish divergence, and we do have WoodsBot levels, right? We have this 50-minute levels there, right where the Fibonacci number is. And this is really nice because Fibonacci pretty much always aligns with WoodsBot from the WoodsBot Premium Indicator levels. It most of the time it does, you know. And you can see we have bullish divergence on the 50-minute chart. So you were looking for an entry on the 12-hour chart, remember? But there were no levels to play with. There was no additional confluence. The additional confluence you get on the lower time frame. And you can see how perfectly the strategy worked again, where it sniped the Pico perfect entry for Bitcoin, right? Like you had the bullish divergence coming into a WoodsBot Premium level, into a Fibonacci level, and this is perfect. So the advice that I can give you guys is, even though you might not have a lot of time to trade, you can plan your trades on the higher time frame, and then you can set yourself an alert, for example, right before the before price action hits your WoodsBot levels, or before it hits Fibonacci, or whatever confluence you use. Set yourself alerts, and then you just have to spend maybe half an hour, 50 minutes to wait for your confirmations for the trade on the lower time frame, right? As you saw earlier, you had the 50-minute bullish divergence, you had the WoodsBot level being hit, all happening on the lower time frame. So you don't have to spend a lot of time, even though you trade based on higher time frame, you execute on a lower time frame. I think this is really, really important. And a lot of people don't do this. They wait for signals on the daily time frame when they plan on daily time frame, but you don't get a lot of signals on the higher time frame, right? So plan your trades on the higher time frame, execute on the lower time frame. Now, what time frames are useful? At least in my experience and in my opinion. I can recommend for higher time frame trading, like really to be able to tell, okay, where is the macro top, where is the macro low? Obviously, the monthly time frame is really good for that. The monthly time frame is exceptionally well in seeing where's the really higher time frame market structure, you know. And you can also see there's, for example, we had monthly bearish divergence on the RSI, right? And this is what's called the top. So even though it takes a lot of time, the monthly is still useful for calling tops and bottoms on a macro scale. Now, personally, I don't go higher than the monthly time frame But I know a lot of people also use the 3-month time frame, which is also pretty useful. In my experience, I don't personally use it a lot, but I know it is useful. And obviously, you can still use the yearly time frame. But for Bitcoin, it's Bitcoin is so young, so on the yearly time frame, there's not a lot of data. I also use the weekly time frame for my higher time frame bias. The weekly I use actually quite often a lot. So whenever a weekly candle closes, I look at, did it close below or above key levels? The weekly candle really forms my bias for the next week. The best higher time frame trade setups I do get on the 5-day time frame. I think the reasoning behind the 5-day chart, or why I do get the best trades on this time frame, on the higher time frame, is because stocks do trade on trade on a 5-day basis, right? So stocks closes on Friday and not on Sunday, or traditional markets. And I think this is the reasoning behind why I do get a lot of good setups on the 5-day. So I can highly recommend the 5-day time frame as well. 3-day and 2-day, it depends on your personal preference. I think both are fine, but I think you should choose between one of these and not use both, because they're not too different to each other, So for me personally, I use the monthly, weekly, 5-day, and daily, but you can also use, for example, the 3-day instead of the 5-day. I know a lot of people use that as well. The daily is obviously super useful. Having a daily closure above key levels is extremely important. If you can, for example, see we deviated right here, but if the daily closure would have, for example, closed above the swing high right here, this would have been really nice, but it didn't happen, right? This is why the daily closure is really important. The 12 hour is also really nice. It is similar to the daily, but obviously a bit shorter. So I do like to use the 12 hour a lot. I think that there's lots of clean price action happening on the 12 hour. I know, for example, Woods uses the 8 hour. Personally, I don't use it at all, so I don't have a lot to say for that. My main bread and butter, where I make the most amount of money, is the 4-hour time frame. So I trade mainly based on the 4-hour time frame. I plan on the 4-hour, but I execute on the 15-minute, right? As I said in the beginning, if you use the 4-hour time frame and plan based on the 4-hour time frame, execute on the 15-minute time frame. I can recommend this highly. It works really good. Other than that, you can also execute on the 5-minute chart if you use the 4-hour chart. If you plan your trades on the 4-hour, you can use the 5-minute charts to execute. But I would recommend more using the 15-minute chart to execute your trades on. Now, if you go lower time frame, you can do this, but keep in mind price action is not as reliable as if you were to plan on the 4-hour time frame, but there's definitely lots of potential for that. I do like the 30-minute, I do like the 15-minute, but again, if you plan your trades based on the 30-minute charts, you need to execute on even lower time frame. You need to then execute on the 5-minute or even 3-minute charts if you plan your trades based on the 30 minutes. And again, for example, if you use the daily time frame, you plan your trades based on the daily time frame. You can use the 1-hour time frame to execute. If you use the 5-day time frame, you can use the 4-hour time frame to execute on your levels. Same with the weekly. If you use a weekly time frame, you can use the 4-hour or 12-hour to execute on your levels. And if you use the monthly, I would recommend using at minimum daily execution levels. So if you plan your trades on the monthly, at least use the daily as your execution. So plan on the higher time frame, execute on the lower time frame. And when it comes to the WoodsBot Premium Indicator levels, you can also see that there's different time frames on the indicator, right? On these in these confluence zones. For example, we have a weekly level and a 3-day level inside this confluence zone, right? The reasoning is, or the reasoning why this is so strong is because, again, if you go, for example, to the monthly time frame, you only have like 1, 2, 3, 4, 5, 6 WoodsBot levels, right? Or 7. Like, it's not a lot of WoodsBot levels, but they do have a lot of impact, right? The higher the time frame you go, the more impactful a level is. So if you then go to, for example, you plan your trades, you go to the weekly or the 5-day, and then you see, okay, this is a weekly level, but also a 5-day confluence level. It adds up, you know. The more time frames align with each other on one area, on one zone, the stronger it is. I hope that makes sense. And this is what, in my opinion, makes this indicator also special, you know. Like if you are on the 4-hour chart and you are planning your trades, you can see the other time frame levels. You don't have to look through every chart and find the levels and mark it out, you know. You have this confluence zone and you can see, okay, we actually have a 4-hour confluence level, we have a daily level and a 3-day level. This is massive confluence for one zone. It makes it stronger, it makes it more precise. It makes it more likely for price action to react from this level if it were only like a 1-hour level, right? Or a 2-hour or 4-level level. But if it also has the daily and the 3-day level, so higher time frame levels, it makes price action become even more likely to react from this level. So again, to recap everything, you need to choose your time frame based on how you want to trade. Choose your time frame based on how much time you have. I can always recommend using a higher time frame. The higher the time frame you go, the more precise your trades will be, the more reliable it will be. But there's more opportunities on the lower time frame. So if you have a lot of time, you can definitely make it work on lower time frame and make way more money than a person who trades higher time frame, because there's more opportunities on lower time frame. So there's pros and contras for using higher time frame or lower time frame levels. Personally, I can highly recommend planning your trades on the 4-hour time frame, but executing your trades on the 50-minute time frames. If you use the 12-hour time frame, plan your trades on the 12-hour time frame and execute on the 30-minute time frame. If you use the daily, plan your trades on the daily time frame, but execute on the 1 hour. If you use the 5-day, plan your trades on the 5-day, but execute on the 4-hour time frame. And for the weekly, plan on the weekly, but execute on the 4 to 12 hour. And on the monthly, plan on the monthly, but at least execute your levels at the daily time frame at minimum. The higher the time frame, the better. So that's about it. I hope this covers some of your questions. I hope it gives you guys some clarity about the importance of timeframes, especially when it comes to the WoodsBot indicator, and how important it is that you have these timeframe related confluence zones, because price action reacts heavily upon these levels. And you can see when you have different trends on different time frames, right? You have a bearish trend on the monthly, but you have a bullish trend on the daily time frame, you know? So it can be really confusing because sometimes you don't know what to do. Do I form my opinion based on the higher time frame or on the daily, for example, or on the 4-hour? My advice is to use multiple time frames, plan your trades based on the medium to higher time frame, and execute on the lower time frame. This is what my recommendation is, and I hope this helps you guys. Thank you guys for watching, and I see you guys in the next video. Bye bye.